G'day folks, welcome back to Pete's Investing. It's May 7, 2024. This is the S&P 500 update with the NASDAQ, the GermanDax and the Japanese Nikkei, and also looking at the VIX as well. As you can see, they're all moving higher since the last couple of days, and the VIX is continuing its downtrend. In terms of the heat map, you can see at the bottom left, predominantly the indices are all bullish, as well as the VIX, and on the daily, they're all bullish as well. And on the weekly time frame, a few of them are bearish and a couple are neutral. So just be careful about going long too aggressively. There's still some volatility and potential downside. So looking at the VIX first of all, on the monthly, it's pretty much moving sideways. On the weekly, it was declining. We did have a bullish divergence here and versus lower lows on the price, and that's bounced slightly, although it's still pretty much moving sideways after a bit of a retrace to the upside there. On the daily, again, you'll notice the CCI is rising ever so slightly, and then it's collapsed in the last couple of days, a few days to the downside. And on the 1 hour, we've got a declining VIX chart on the price chart, but we've got a small bullish divergence here in the last few hours versus lower lows on the price. So we may see a bit of a bounce possibly. So just be careful about going long if the VIX continues on the down slide. On the US S&P 500 on the monthly, you can see they're still moving higher on the price chart, and it's still very bullish, although we did have a couple of bearish divergence, and we've got one currently playing out. Got lower highs on the CCI versus higher highs on the price, and it's dropped off slightly, but again, moving still higher in the current month on the monthly. Now on the weekly chart, again, likewise, we've got new highs. It's almost reaching that new high as well. We've got a bearish divergence here on the CCI versus bullish movement on the price chart. So higher highs on the CCI lower highs on the CCI versus higher highs on the price. But again, we've got a bit of a retrace, and again, it's moving higher. So long as that keeps rising, and if the CCI rises higher than that entry point, then we're going to continue to consider that as a invalid divergence. Now on the daily chart, you'll notice there it's pulled back and it's touched our target area. We had a bearish divergence here, and we drew a target between the 23 and the 38% level of that Fibonacci range, and it's pulled back and hit our target. Now if I zoom out to 5,000 units, we do track these, and you can see there we've had I've circled where all the recessions have happened. The last one here in 2008, 2009, the GFC, then the 2015-16 decline, and more recently with COVID, that massive decline there. So zooming into those, for those new to the channel, if I go back historically, you can see there we had bearish divergence on the CCI versus higher highs on the price. It fell off. Then we had a bullish divergence here more recently in 2022. Go back to COVID period. We had a bearish divergence there versus higher highs on the price. It collapsed. There was no bullish divergence, but you would have waited for the CCI to break above the moving averages there, as well as the price chart to break above those moving averages to be more bullish. And I covered these in the previous video, but you can see there we had another bearish divergence here versus higher highs on the price. The price collapsed. Again, there was no bullish divergence. I suppose what I'm saying is always be careful of a bearish divergence. So where we are today, be mindful, we're in a period now where there's a bearish movement to the to the downside. And that is causing some potential concern. You'll notice there's a bearish divergence currently. Now this could have completed. It's hit our minimum target area, and it's bouncing from there. So that could have already completed the bearish divergence. So long as this CCI remains below that entry point back here, we're going to consider that a bearish divergence. So this could actually continue to collapse, even though it's retraced to the upside. So just be careful about going strongly long. I'd like to see it break above this resistance at 52.69, and that's on the daily. Now on the hourly, if I zoom in, you can see that since our last video, we did have a bearish divergence there versus higher highs on the price. It went up to that point there. The CCI kept declining, and from that point, the price collapsed. And if you had drawn a Fibonacci from that high to that that low to that high, that was almost 100% retrace. If you took it back to that Fibonacci level, that would have been around about the 50 to 38% retrace level before bouncing. Now, at this point, there is no bullish or bearish divergence. That CCI is moving in line with the price, so there's no divergence currently on the 1 hour chart. So on the GermanDax, on the monthly, first off, we've still got a bearish divergence on the CCI versus higher highs in the price, and that actually hasn't started really retracing yet, so just be careful of that one. That's a major divergence. So as long as that CCI remains lower than that point, we're going to consider that a bearish divergence, so just be careful about going strongly long. That's been a long-term divergence. On the weekly chart, we had a couple of divergences here. This first one here, up to that point there, and it fell off, hit our minimum target area marked by that rectangle. And a longer term, we've got this current bearish divergence up to that point, higher highs on the price, lower highs on the CCI. It fell off slightly. You can see there that CCI fell off. So that could be the start of a retrace to the downside. So just be careful about going long. I'd still consider that a bearish movement. And again, some of these are long-term divergence, as I said, on the monthly. So just be careful. Sometimes they could take some time to play out. And all these divergences, by the way, are independent on the different time levels. So the daily is different to the weekly and so on. And on the daily, likewise, we've got a bearish divergence that fell off. That could have already hit our target and finished the divergence. But again, that's still lower. So that's still, as long as the CCI keeps dropping, we expect the price to also keep dropping. And again, I'd like to see it break above that resistance at 18,602 to be more bullish. And on the 1 hour chart, we did have if I zoom out a bit, we did have a bearish divergence there versus slightly higher highs on the price. Price fell off quite substantially, and that would have been roughly around the 38% retrace level between that and that point. If I draw a Fibonacci for those new to Fibonacci's, that would have gone from that low to that high. You can see there that went as low as the 50% level at that point there before bouncing. So that may have already completed its divergence. Notice as well we've got a bullish divergence here currently in play. And again, that would have bounced and hit our minimum target, and I've drawn the Fibonacci in this range. You can see they've broken up equal to the 100% retrace level up there so far. That's 100%. That's where the current price is. Whenever they break above the 61%, that's something to look out for. It generally means the price will continue, although no guarantee how far it's going to go. In this case, it's gone up to the 100% level. On the Japanese Nikkei, you can see here we had a bearish divergence. That's why I draw these minimum targets. You can see they had higher highs on the price, fell off, hit our minimum target range, 23-38% level. And that was a Fibonacci between that low and that high. The CCI fell off. It punched through and reached in that wick of that candle, hit the 50% level, or below our target area. Then it bounced from there to make new highs on the price. Now that's now invalidated, that bearish divergence, because that CCI has gone higher than that entry point there on the monthly. On the weekly, we still have a bearish divergence. That high on the CCI is still lower than that high on that point there versus the price. So that's still a bearish divergence, and I've drawn a target area there. Hasn't reached it, although the CCI has punched through the moving average band. The price is still trending above that moving average band on the price chart. That's on the weekly. On the daily, you can see there we had another bearish divergence. The price fell down below this target area, the 23-38% level, went as far as the 38% and started to bounce from there on the daily. And you can see there the CCI is now currently moving in line with the price, so there's no divergence, and so that's already probably completed the divergence. And on the 1 hour chart, you can see there since our last update, the price has been declining in line with the CCI. It bounced, so again the CCI is moving in line with the price, so there's no divergence currently on the 1 hour chart. On the NASDAQ, so you can see here on the monthly chart, we've got a pretty long-term bearish divergence versus higher highs on the price, and the price is still slightly moving higher in the current month, but the CCI is still dropping off, so just be careful about going long too strongly. On the NASDAQ, on the weekly chart, we've still got another bearish divergence still in play, and again these are independent from each time frame. And between this little Fibonacci range, that's their target drawn, and again, it hasn't hit that target yet, but the CCI is still dropping off. So again, for this to be invalidated, we need to see the CCI break higher than that entry point back there. On the daily, you can see there the CCI is also dropping off and still dropping versus higher highs in the price. Hit this resistance up there at 18,465, dropped off in a short term, hit this initial target area, making a bit of a retrace to the upside, so that possibly would have completed the divergence. And on the 1 hour chart, again, the price fell off after this bearish divergence back here. Higher highs on the price, it fell off quite strongly below the 61% of that Fibonacci range. Hit our target, stabilized there for some time, and then started moving in line with the CCI started moving in line with the price. And at the moment, there's no difference in the CCI trending with the price. So again, no divergence currently to be seen.
To support us more, go to the Patreon page where we look at weekly scans of bullish shares. Thanks for watching. See you in the next video.